Welcome back to the Deep Dive. Today we're doing a deep dive into the operations of a true corporate giant. We're talking about a mining company that's one of the world's absolute leaders in producing things like iron ore and nickel, with operations in over 20 countries. I mean, this is a massive entity.
It really is. But the source material we've got, their 2021 integrated report, it shows that size doesn't shield them from accountability. If anything, it magnifies it.
Right.
This report is so much more than just a summary of earnings. It documents a moment of what they call deep transformation.
And that transformation, it feels like it's driven by just pure necessity. So our mission today is to pull out the key metrics and the huge cultural and strategic shifts they detail in this thing. We really need to understand the scale of their commitment to past tragedies, how they're rewriting their safety rules, and where they're heading in the future.
Exactly. And this whole repositioning, it's anchored in accountability. Everything else they talk about, governance, climate strategy, all of it, it flows directly from the two devastating dam failures that haunt their recent history.
Okay, so let's start there. Let's unpack that history, beginning with the shadow of the Brumadinho tragedy. The report actually covers the third anniversary of that Dam B1 collapse.
An event that claimed 270 lives. I mean, the social and environmental damage was just profound, and the scale of the response, it's almost impossible to really wrap your head around.
It is.
The financial commitment alone gives you some idea. In February 2021, the company signed a comprehensive reparation agreement. The estimated value of that agreement was just a staggering $37.7 billion.
And that's just the estimate.
Right. And to give you some context, by the time this report came out, $23 billion had already been paid out. We're talking about an economic response that fundamentally changes a company's entire capital structure.
Truly colossal.
Yeah.
And it wasn't just some big headline payout, right? The report goes into a lot of detail about the personal compensation effort. They note that more than 11.4 thousand people got compensation through individual and labor agreements. That's what, 2.6 billion paid out just under those specific processes. It's remediation on an industrial scale.
And you can't forget the other ongoing effort, the one related to the 2015 Fundone Dam breach in Mariana. That was a joint venture, and this company holds a 50% stake.
So they're managing two massive multi-billion cleanup efforts at the same time.
Exactly. And the reparations there are handled by a separate group, the Renova Foundation, which by December 2021 had already dispersed $20.2 billion.
That Mariana disaster brought up a really fascinating challenge, didn't it? It was about the people who didn't have formal jobs, fishermen, artisans, people in river communities. They suffered huge economic losses, but they didn't have pay stubs to prove it. How did they even start to compensate them?
They had to innovate. They actually created something called the Simplified Indemnity System, which they nicknamed Novel. This system was designed specifically to speed up compensation for that exact group, the informal workforce.
And it was essential.
Yeah, because the usual legal routes were just way too slow and, frankly, inaccessible for the people who were most affected.
That's such a critical detail. And the novel system, it wasn't some small side program. The numbers really show its role.
Oh, absolutely.
Over 363,000 people received aid through this system. The total came to 8.7 billion. The sheer volume shows how important it was to just cut through the red tape and get money directly to people.
And yet, despite these huge numbers and all the changes, the tension is still there. The report actually included feedback from an independent review, and it pointed to this critical disconnect.
What was that?
The gap between what the public expects in terms of speed and the actual pace of the reparations. The review explicitly recommended that the company has to keep finding ways to speed up the results.
So the money is flowing, but the perception is that it's still too slow.
Exactly. That perception persists.
That makes a lot of sense. I mean, recovery isn't just measured in capital, right? It's measured in time and trust. What were some of the on-the-ground efforts they mentioned to try and rebuild that community trust?
Well, for one, they continue the search for missing victims, which is just a profound commitment to closure.
Right.
They're also maintaining a constant supply of mineral water, water tank trucks to riverside towns, just basic needs. And then they have these smaller, really local projects, like one called Sewing Hope. It's an embroidery initiative for women in Brumadinho. The idea is to use productive work as a tool for recovery. So it's this combination of the billions in payouts and these really hyper-local efforts that defines the whole thing.
The toll from these disasters, human and financial, it was so immense that it forced a total change in the corporate structure. So let's get into that in Section 2, how they rebuild the company's DNA through governance and safety.
Right. This is where the structural changes really laid the groundwork for accountability. The biggest single change was probably the termination of the shareholders agreement in late 2020.
And what did that do?
It moved the company to a corporation model, dispersed capital.
Okay, so what does that actually mean for you, the listener? Why does dispersed capital matter so much?
It means no single group or block of shareholders has a defined controlling interest anymore. And that shift, it increases the influence of external governance, and it reduces the risk that decisions are controlled by, a narrow, entrenched group.
So it forces leadership to be more responsive.
Exactly. More responsive to the broader market, which now includes huge ESG demands.
And the governance structure was completely overhauled. The new board of directors, it had 13 members. And the key part was that a clear majority, 8 of them, were elected as independent directors. That's a huge signal.
Absolutely. They also created 4 new executive officer positions, basically elevating certain functions. Crucially, they added an executive officer of sustainability and one for strategy and business transformation.
So when you make sustainability a C-suite job,
You've signaled that it's no longer just some side project. It is central to how you operate.
okay, so let's move to the biggest challenge they face. Dam safety. This is the single biggest risk factor in the whole sector.
It is. And they've set a really ambitious, quantifiable target: 100% adherence to the global industry standard on tailings management, or GSTM, by 2025.
And GSTM is basically the new global gold standard for this stuff, right?
Yeah, it is. It was established after Brumadinho to prevent anything like that from happening again.
So how are they doing on that target?
It's a massive undertaking. The report confirmed they reached about 60% adherence to GSTM requirements by the end of 2021.
And they also have the huge physical task of just dismantling the riskiest structures. Their decharacterization plan saw 7 upstream dams, which are the most dangerous type removed between 2019 and 2021.
Right, but this is where you see the scale of the historical challenge.
It's not a quick fix.
Not at all. The full plan involves 30 of these upstream structures, and the deadline for the really complex projects goes all the way out to 2035.
So they're managing this incredible risk for over a decade while still operating.
Yeah, that speaks to just how long these industrial structures are around.
So in the meantime, they've introduced these engineering fail-safes. The report says all the dams at emergency level 3, that's the highest risk category.
Yes, they all now have a downstream containment structure, an ECJ.
What exactly does an ECJ do?
Think of it like a huge engineered safety net. If a high-risk dam were to fail, the ECJ is a secondary wall built downstream. It's designed specifically to hold back the tailings, the mining waste.
So it buys time.
It buys critical time, it limits the damage, and most importantly, it protects human life.
And that safety net is backed by a huge investment in monitoring technology. They're running 3 geotechnical monitoring centers 24 hours a day.
This is where tech meets heavy industry. I mean, they're using satellite imagery, drones, ground-penetrating radar, all to watch for tiny ground movements in real time. This kind of active, continuous monitoring is what's required to manage that 2035 timeline safely.
And crucially, they're also trying to solve the problem at the source. They're moving away from wet tailings storage completely.
Yeah, the company's investing an estimated $2.2 billion by 2026 into what they call dry stacking technology.
Which is a game changer for risk.
A total game changer. Instead of storing waste slurry in these massive dams full of water, dry stacking filters the water out. You're left with a relatively dry material you can just stack like rock. You eliminate the water, you drastically reduce the risk of liquefaction.
Which is the main cause of these catastrophic collapses.
Exactly.
And they've already started. They have a new filtration plant at Vargem Grande that processes ore at its natural moisture. So it completely eliminates water from that part of the process. That's a huge step.
It is. And beyond the infrastructure, you can also see the cultural shift in their workforce safety numbers. They achieved the lowest total recordable injury frequency rate, or TRI-IFR, in company history. It was 1.41.
So what does that number actually mean in this industry?
It's the number of recordable injuries per million hours worked. And while 1.41 is a record for them, it shows improvement in the day-to-day safety culture. But, as the report grimly points out, the work isn't done. Despite that record low rate, they still had 2 fatalities in 2021, 1 employee and 1 contractor. And that painful statistic shows that their stated value of life matters most is still a very active, urgent challenge.
That tension is a powerful theme through the whole report. Progress measured in billions and decimals, but failures still measured in lives. On the social front, Their commitment to internal diversity seems pretty strong. They've committed to doubling the representation of women to 26% by 2025.
And specifically in Brazil, they're targeting 40% of their leadership positions to be held by Black individuals by 2026. So these are concrete metrics with specific timelines.
And accountability is also being enforced internally. The whistleblowing channel saw a huge surge in reports, up almost 34%.
Yeah, over 6,200 reports.
Does that mean more problems or just better reporting?
Usually a surge like that suggests there's increasing trust in the system. Employees believe that if they report something, action will actually be taken.
And it was.
It was. The confirmed violations, 11 cases of sexual harassment, 18 of moral harassment, all resulted in terminations for the employees involved. That sends a powerful message.
Okay, so with that foundation of safety and governance clear, let's shift to their future. Their strategic pillars: climate innovation and portfolio focus. How are they planning to actually profit from this massive overhaul?
Well, their climate commitments are ambitious. They're aiming for net zero for their own operations, that's Scope 1 and 2 emissions by 2050. But the vast majority of their climate challenge, something like 97%, sits with their customers. That's the much trickier Scope 3 challenge.
Right, because their main customers are steelmakers, and steelmaking is just inherently carbon intensive.
Exactly. So to tackle that, they're aiming to reduce those Scope 3 emissions by 15% by 2035. And to make sure these targets aren't just, abstract goals, they use this fascinating tool for their investment decisions.
The shadow carbon price.
Right. They apply a shadow price of 50 per ton in all their project valuations.
So how does that change things in the real world? How does it affect their capital allocation?
It's a way of future-proofing their balance sheet. When they evaluate a new mine, they internally add a hypothetical cost of 50 for every ton of carbon it's going to generate.
So a project that might look profitable to a competitor
might get rejected by this company because it looks too expensive under that shadow price. It immediately forces them to prioritize cleaner investments.
That's a high level of foresight. And their innovation seems geared toward creating products that help their customers clean up their own operations. Tell us about the green briquette.
The green briquette is this patented low-energy iron ore product they launched in 2021. It's basically a cleaner, denser form of iron ore that needs way less energy in the steel-making process compared to traditional pellets. They're trying to solve their customers' carbon problem for them.
And they're even working on recycling their own mining waste.
Yes. They announced plans to create a new company focused on green cement that uses mining waste sand. So they're turning what was once a liability waste into a construction material.
This focus on high-quality, lower-carbon materials seems key to their whole strategy. Their base metals division, copper and nickel, is central to the global energy transition.
This is a crucial area. Their nickel from the Long Harbor operation already has a carbon footprint 3 times lower than the global average for Class I nickel. As the world scrambles for clean battery materials, having a low-carbon feedstock is a major competitive advantage.
And to sharpen that focus on their core assets, iron ore, copper, and nickel, they're selling off non-core businesses.
Yep. They signed agreements to sell the Moatize coal mine and the Nacala logistics corridor, a clear exit from the fossil fuel sector.
They also completed their really complex sale of their New Caledonia operation.
They did, but that sale required them to first put in $555 million as part of a $1.1 billion package just to stabilize the asset. So it shows that reshaping your portfolio isn't always simple or profitable. Sometimes it's a strategic move to manage a liability.
Right. And finally, outside of the direct reparations, their general commitment to communities seems to be expanding. Socio-environmental spending reached $1.3 billion in 2021, which is a 28% jump from the year before.
And this supports their new social ambition, which is to be a partner company in the development of resilient communities. A really clear example of that was their pandemic response. They invested over $153 million in COVID-19 humanitarian aid since 2020.
What a detailed and just complex picture of a company. To summarize this report, you see this corporate giant pouring billions into overhauls, from new dry stacking technology to strategic divestments, while still battling the slow pace of community recovery and the shadow of its past.
It's an ongoing process of institutional repentance.
It truly is. It's a study in managing legacy debt while trying to chart a completely new, cleaner future.
And speaking of that new pact with society, I think the boldest commitment shows up in the human rights section. The company formally decided to abandon all mining processes on indigenous lands in Brazil.
That decision led to them declining 104 such processes. It's a recognition that any activity there has to have the free, prior, and informed consent, the FPIC of indigenous peoples. That's a massive self-imposed limitation.
It is. So given this company's focus on supplying high-quality metals like copper and nickel, which are absolutely essential for the global energy transition, for batteries, for electrification, this raises a critical strategic question for you to consider. How will this new voluntary commitment to not operate in sensitive areas affect its long-term ability to secure the essential mineral resources the rest of the world is demanding for its own decarbonization? That is the trade-off between social responsibility and global supply that they now face.